to bring in Scott Bauer. He's the CEO of Prosper Trading Academy. He's joining us to help us take a look at some of the economic data headed our way this week. Scott, welcome. Thanks for giving us part of your Monday morning. I was just talking with Stephanie about earnings. Some of the companies set to report second quarter results, and primarily the focus being on the banks. But it's not just earnings this week. We've got CPI, retail sales, some central bank activity, and well, all of that at play. I guess I'm wondering, to start things off, what are you dialed in on?
It is a monster week for economic
Sure
data,
is.
let alone the earnings report. So, it's hard to focus on one thing, Ben, because every single day, excuse me, we're going to get a double dose of both economic reports and earnings. So, I think what traders and investors alike this week are going to have to do is not just get focused on one report. We're going to see a lot of volatility. In my opinion, we're going to see a lot of volatility this week. I wouldn't be surprised to see VIX trade over 30 again. And really what's going to happen is, day to day, minute by minute, hour by hour, at the end of the week, we're going to have to really take a deep breath and really decide, okay, what is the forward-looking momentum here for the market based on earnings? And what were these economic reports that came out? Because so far what we've seen over the last 3-4 weeks is globally, these reports have been very positive on an upward trend. Is that going to continue?
Yeah. Scott, I like what you're saying here because I think this is important. You mentioned how it's hard to focus on just one data point or one key point here. In some ways, I think that would be a big mistake. I'm sure you would agree. I mean, because what we're really trying to do is, as you mentioned, kind of gauge what is that forward-looking momentum, not only in terms of the earnings in these individual companies, but economic conditions here in the U.S. and globally as well. That's one of the things Stephanie and I have been really trying to drive home to our viewers is put all these pieces together, because that's what we're trying to do, is establish the bigger picture.
No doubt about it. And like I said, if you try and take one piece of the puzzle this week, you'll be in and out of positions the entire week.
Well, that's oftentimes not necessarily, or was never a good thing for me as a trader.
Yeah, me neither.
Sure. I found that the less I traded, the better off I did, actually, in terms of managing positions and some of the emotions associated with it. Let's talk about some of the central bank activity, because that also has potential to stir or add to some of the volatility that you're expecting to see this week. But for the most part, one of the trends we've been seeing there, the RBA last week, for the most part, it seems like since a very aggressive effort to stimulate the economy, they seem to be kind of sitting back in a bit of a wait-and-see holding pattern type mode.
I think that's kind of the theme across the world right now, is almost to sit back and let's see what happens. That's the expectation coming out of Japan. I think we're going to see the same thing coming out of Canada as well. Not much, happening in the way of central bank activity, but more dissecting what has happened and what their projections may be moving forward.
Okay, so then ultimately, I mean, I would think that would mean, for the most part, that we see the dollar continue to be in this bit of a holding pattern. I mean, if the central banks are, there's not really a major catalyst at this point for the dollar, or rates even for that matter.
No doubt about it, though I do think the dollar is coming down to some significant support. We're not so far away from the June lows and actually the March lows that we saw, which is just a tad lower than that. So I would be surprised to see a continuing decline in the dollar much further than where we are right now. And I actually think that with any negative surprises that we may get, whether it be in central bank activity, economic data, or quite frankly, on the negative side of earnings, I think the dollar has room to pop. I think we're closer to some significant support than we are what it may move to on the upside.
Yeah, I've been talking about how that short dollar trade seems to be kind of a crowded one at this point, especially as long, or it seems like the longer that we hold down near those March lows without taking them out, seems like ultimately it potentially builds momentum here to see a bit of a pop, as you just mentioned. Scott, one of the things that we talk about in terms of the dollar is the relationship it shares with commodities. Earlier in the show, I was talking about the strength we've been seeing: copper, silver, gold, all bid amidst some of this dollar weakness. rates, which have been holding pretty low. What are you watching in terms of relationships in some of these markets, whether it's markets that are diverging in terms of strength, like, for example, one could say the strength we're seeing in the NASDAQ relative to the Russell, or some of the, again, expected kind of correlations that you'd expect to see where silver, copper, and gold, the precious metals and industrial metals right now are rallying. What are some of the relationships you're watching?
So number one, I think when you look at the precious metals here, those are going to continue to be bid. You may have their, little bit of sell-offs every now and then, but they're going to continue to be bid. My guess is all the way through the election at least.
Okay.
In terms of any sort of divergence, the NASDAQ has diverted itself from the Russell and from the overall market. I think that the largest it ever has. At some point, and I don't know when that point is, Ben, I would expect some of that to catch up and narrow a little bit. And then you look at the oil space in terms of commodities as well. You've caught a bid recently, though oil is trading off today a little bit because there's, a little bit of rhetoric, a little bit of concern now maybe about some more coming online through OPEC. So, in terms of divergences, it's a little bit difficult. We know that the market has not traded on typical trend in terms of, commodities versus equities versus fixed income over the last few months, and I think that's going to continue.
Yeah, whether you look at investor irrational exuberance or just the fundamentals not necessarily matching up to some of what we're seeing in terms of price activity, there have been some interesting divergences, and I would say that's where price activity presents itself, or opportunity at least, I should say, in terms of price activity presents itself for us as traders. Scott, final thoughts here in terms of, again, I've been sort of talking a little bit about this week about what traders, what investors are focused on about a potential derailing of some of the momentum, the trends that we've been seeing to the upside. Whether you're talking the indices or commodities, gold, copper, silver, we just mentioned, have been very well bid across the board. What could slow that some? What concerns you right now out there, or is it all just good news and happy trails?
Of all the economic indicators we're going to get this week, I actually think that maybe the most important one for the U.S. is retail sales, what we're going to get later in the week.
You were going to say that, yeah.
That gives us, as good of a barometer as any to really see what Main Street USA is doing here. We're going to get consumer confidence as well, but retail sales is really a key for me to see the strength of this recovery. I know that people, you're out there. I'm heading out to the stores now also, and these stores are flooded with people. They can't get enough of going out. So let's see if that continues. More importantly, though, I think 2 or 3 weeks from now, or the next report that will encompass the lockdowns that we've had recently here, if those numbers hold, those are really good numbers then that could be.
Yeah, strength of recovery, as you mentioned, or as some people are concerned, lack thereof, but definitely spending habits and consumer trends are a focal point. I'm glad you mentioned retail sales, and pent-up demand is certainly something I've been seeing. I personally have. Sounds like you do as well. Scott, we'll let you get out there and start spending, and don't forget to get me something while you're out there, and really appreciate you joining us. I'm half kidding, Scott. Half. Scott Bauer is the CEO of Prosper Trading Academy. Is joining us. He's helping us get the week started.